Welcome back to our podcast series with BAFT, Banking on the Present. This episode is being recorded shortly after the BAFT Global Annual Meeting, where my guest, Tod Burwell, spoke to dozens of bankers in his capacity as president and CEO of BAFT. I wanted to hear what they had to say. What are their most pressing concerns and priorities as the interconnected, multifaceted world of transaction banking continues to evolve? Tod, welcome back to Trade Finance Talks, and thank you for joining me today.
Thank you. Glad to be here.
Could you please introduce yourself in a little bit more depth and tell us about your role within BAFT?
Sure. So, Tod Burwell, I'm the president CEO of BAFT. I have been with the organization for about 15 years now, but a career-long transaction banker with several institutions before coming here.
So you've been with BAFT for 15 years. Have you attended the global annual meetings in each of those years?
Every year. And several years when I was a banker. So it's different being on the inside of the production rather than just being an attendee. But yeah, every year, this is our flagship conference, so to speak.
And what would you say is the purpose of these meetings?
So this specific meeting has an interesting format. One is this is when we always elect our board of directors. And so that's kind of the distinguishing factor from all of our other conferences. The second thing is since we launched our Future Leaders program 11 years ago, this also serves as the platform for the Future Leaders project teams to deliver presentations on their projects, and then they have their graduation. The other piece is this has become known as a mini Sibos because many of our attendees come here specifically to have bilateral meetings with each other and to do business. So we carve out part of the day, each day, where it's just dedicated to doing bilateral meetings and business. And then the other part of the day is where we have the content. And the interesting thing is many of our attendees tell us that they love it that we split the day because when they go to Sibos, they typically don't get the opportunity to go to the content. And so when they come to BAFT, they get the best of both.
Thanks. I want to talk a bit more about the sessions themselves, or maybe even what came up while you were networking. What would you say are the key themes from the BAFT annual meeting this year?
This year's theme was really around realignment and global realignment, which has been evolving for a while, but I think has really been punctuated with some of the geopolitical events over the last 12 months. I would say the last couple of years there's been a consistent theme, sort of an undercurrent theme around innovation. That was really the focus of last year's annual meeting was really around innovation and how technology was transforming the industry. But if I go back a couple of years, we had a similar, though slightly different approach to it where there was recognition that the landscape was changing. The question was how are organizations building bridges and building relationships to deal with all of the change that's happening within the ecosystem. So this year, we were talking earlier about geopolitics. It has become much more of a constant. And so over the past couple of years, the pivot points may have shifted from US-China trade wars to tariffs and the implications and the fallout from tariffs to defense issues becoming a central theme in Europe to now we've got a war taking place in Iran and what's the contagion and the impact from that. And so when we speak to several of the senior leaders, this has become just a constant part of how they have to manage their business. So the discussion is more on, is the approach to risk management any different? At least what I've been hearing is that how people are deploying technology combined with how they're using their human capital is one of the themes of how they're dealing with this constant sort of change and disruption.
Talk a little bit more about the geopolitical disruption point and shifting from thinking of these circumstances as isolated events
i.e. US-China trade war, European defense capabilities, war in Iran, to just a perpetual state of uncertainty. How has this understanding that we're now operating in permanently uncertain times affected demand for working capital solutions from banks?
Let me perhaps start by saying thematic, and these are my words, not necessarily the intended purpose of this year's annual meeting, but this theme of fragmentation has been building over time. And so what I think we have seen is that the continued disruption through wars and through tariffs and things like that have forced countries, and therefore forced the companies operating within those countries to, number one, reconsider their own footprint and how they're doing business and where they're doing business. Number two, to reconsider their networks, their partners, their suppliers, and their providers, and how they're doing business. And so all of that is taking place while at the same time, organizations are trying to deploy technology in a way to make themselves smarter, more efficient, more responsive, and so forth. From a working capital point of view, I would actually go back to COVID. And in a lot of ways, I think we're still dealing with a little bit of the impact of COVID and what that did from a working capital point of view, because post-COVID, there was just a huge demand. There was also a mindset change from a just-in-time efficiency focused perspective to more of a just-in-case resiliency focus. And so from a corporate point of view, you started to see longer conversion cycles. You had higher levels of inventory. And so if you have longer conversion cycles and higher inventory, it can also then stress your liquidity. And so kind of following COVID, and I'd say maybe 2 years, for the past 2 years or so, we've heard that this notion of trapped liquidity has been a theme. And so there's quite a bit of emphasis on efficiency and how to balance this issue of excess working capital with the demand for liquidity to continue your operations and provide resiliency.
Thank you. All kind of makes sense, especially when you think about how the impact that COVID has had on how supply chain shocks are managed. I want to talk a little bit more about the technology aspect now. AI cropped up quite a lot in the sessions. Should banks be focusing on when deploying capabilities in this space?
We've actually had a couple of white papers that we've released around artificial intelligence and use cases and so forth. But thematically, I think we consistently hear the point around two things. One is governance, and the second is really around how you balance your decision processes to optimize the use of the technology while at the same time optimizing the human decision-making capability. And there are examples that organizations always give. What I bring it back to, and forgive me for this sort of cheeky reference, but my granddaughter had a favorite series that she used to watch called How to Train Your Dragon. And so I kind of think the storyline is how to train your AI. And organizations are really trying to make sure that their people first understand how they can use the technology to be more efficient and also change the way they think. But they're now in a stage of the technology cycle where it's how do you train it? How do you teach the AI to do the things that it actually is capable of doing so that you can then use your people more intelligently in your decisioning process. Now, one thing we didn't specifically talk about in our panel discussions, but was talked a lot about in the hallways of our annual meeting was Mythos AI. The idea that we are now at a point where artificial intelligence has been trained to not only keep evolving, but to also develop a capability to speak with other artificial intelligence to then develop its sort of own language. And there were many references to Skynet and other things out of Hollywood. But I think the idea is that we're at a place now where artificial intelligence, 3 years ago, we were talking about how do you use AI within transaction banking. That then moved moved on to generative AI, and how is generative AI able to be used within a financial services context. That then moved to agentic AI and how machines are not only making decisions, but machines are now talking to machines and then kind of creating their own language. So as this continues to spin forward, the thing about AI is not only how do you train it, but how do you control it?
Do you think there's a genuine fear among the bankers or the attendees of the annual meeting that AI is going past a point of control and there's an actual sense of trepidation that these models could start talking to each other now? It seems pretty dystopian and quite, like the Black Mirror.
Yeah, so they may not go on record and say that. Certainly privately, I definitely get that sense, right? I mean, if you just think about it, I'll think of it as a person who is continuously circling your home, trying to find a way in. It will naturally make you uneasy. And so if you think about technology that continues to evolve in a way where it looks for weaknesses and then it trains itself how to take advantage of those weaknesses, that's pretty scary. So I think where we are in the cycle, there is a sense that the technology has become super sophisticated. The computing capabilities and capacity have continued to increase. It really does become important how you train your intelligence, because if you have the capability to do bad things, that bad actors will find a way to use that technology to do bad things.
Hey, enjoying the episode? Tap follow for more. Done? Let's get back to it.
I had no idea that artificial superintelligence was such a genuine concern amongst bankers. Hope that no one goes and starts building a doomsday bunker or something.
It was a couple of years ago, one of our future leaders groups presented a paper around artificial intelligence threats within trade and how it was being used. And you could see sort of over time how the capabilities of the technology really presents opportunities for fraud that didn't necessarily exist before.
Yeah,
so it's
especially
caused bankers to really rethink how they approach fraud mitigation, because AI tools are being used to commit fraud, not just prevent fraud.
Yeah, I think deepfakes was something that was super worrying from a securities perspective. Yeah, that's a really interesting point. Thank you. I want to move on before we go down this rabbit hole too much to talk a bit about digital assets. First episode in this podcast series was an explainer on stablecoins, which I recorded with Deepa and Martin recently. Did the BAFT annual meeting evidence any movement in the space of tokenization?
From the time that we started this conversation, there's been movement in the space of tokenization. It's literally moving that fast. I think the stablecoin volume had grown over 60% in the past year. I heard a data point, which I haven't seen the source, but that the stablecoin transfer volume had exceeded that of Visa and MasterCard combined. So there is a real movement afoot, not just with stablecoins though, but I think broadly speaking, the concept of wallets has become much more mainstream in many jurisdictions. And so whether it's stablecoins or whether it's crypto assets or whether it's CBDCs or whether it's some other form of digital asset that evolves, I think we are on a one-way track towards wallets becoming the norm, and that will move eventually from just a retail application more into a wholesale application. I think the thing that I heard talked about at our annual meeting and what we've seen is a couple things. Number one, the banks are really, really hot on tokenized deposits. And there are several live examples of institutions deploying tokenized deposits, which, if you are a multinational corporation, becomes an efficient alternative for how you manage your portfolios. There are also now, I think, some live instances of tokenized trade where it's kind of moved from theory into practice. It certainly has not scaled yet. The key point is that we're moving from a concept to actual solutions and platforms where this can be done. And so what's happened outside of that is several jurisdictions realize this is a real thing. Regulators and central banks are putting in place the frameworks as to how to govern digital assets. And I was literally just this week speaking with someone from a European bank who mentioned to me when the US accelerated the Genius Act, that really caused a sea change in how organizations in Europe approach digital assets. And so I think several other parts of the world, particularly in Asia, they've been on this wallet train for several years. The world is moving at different speeds, as far as how they're adopting it. It's caused organizations like the IMF and like the FSB to say to central banks and regulators, you all need to get together to figure this out, because otherwise you risk certain jurisdictions having very uneven capabilities, which is not necessarily a good thing for the global financial system.
Do you think that's a risk? It seems like bodies like the IMF would encourage unity among, say, US, European adopters, Asian adopters, more on like a regulatory sense. But what about the infrastructural diversity? Do you think uneven technological adoption across jurisdictions risks increasing the gap between developing and developed markets if the world moves towards one which is fully on digital wallets?
I definitely think the infrastructure point is an important one. The flip side of that, I haven't worked my thoughts through to conclusion. But if you go back to, we were just in Nairobi a couple of weeks ago for our Africa Forum, and you think about the evolution of M-Pesa, which was well before several other, large mobile wallet solutions came about. It came about because it was a real market need and there was a capability that filled that need. So I think the same with digital assets. There is the possibility that, the market needs may drive the pace of adoption of many of these, and that adoption may actually go in front of the policy frameworks and the regulatory frameworks. I don't know the extent to which, so for example, if you think about stable coins where you need to have some form of reserve, and then you think about tokenized deposits where you're essentially taking deposits that already exist within the financial institution and you're just converting them. And then you think about central bank digital currency issued by the central bank. It's not clear to me how all of these various forms of digital assets coexist in the future. And if you start to see money moving out of the traditional financial system, i.e. out of the banking system, into forms of digital assets that are either not regulated the same or have implications on the lending capacity within a given jurisdiction, what does that do to the overall financial system? And I'm not sure I understand yet how that's all going to balance out. And it's not clear to me that the central banks have a clear vision of how that's all going to balance out.
I guess just remains to be seen.
Yeah.
As digital assets, AI, all these new technologies take over and become more commonplace, is there a new desired skill set when hiring young talent into the industry? What was the conversation among banks? And maybe, I don't know if this was discussed in your Future Leaders projects.
Interestingly, that was specifically one of the projects that we had. It was, what is a future banker and what are the skill sets that you need to have? And interestingly, one of the most desired skill sets is really the ability to think strategically. I think it's a given that with this next generation of leaders that are emerging, they're very technologically savvy, very comfortable using technology. The question is, are they able to think strategically enough to then figure out how to deploy the technology. And so I won't give a spoiler, but there is a paper on this, and we have a future leaders group that's going to do a webinar on this in the next 2 weeks. But they profiled several types of individuals, and there were 4 types of individuals. There was sort of the client-centric individual. You had the individual who was able to sort of translate between business and technology, because that language is often very difficult. And then you had the person who was still very risk management minded and could ensure that there is a stable foundation on top of which all this innovation can take place. And then you had AI, because AI is also part of the future banker. And the question is, how do all of these people then make up your institution? And so that was specifically one of the Future Leaders projects, looked at how talent needs will change.
And one of the characters in this equation was an AI.
Absolutely, yes.
Maybe doomsday is approaching quicker than I thought.
It was a very positive outlook on it. Not that AI is going to replace the need for bankers. It's just there is a role for AI in banking. So you have to think about the other roles that are needed for bankers.
I would have thought that AI would fit into the previous 3 roles. So the technological translation, client-facing, and risk management. AI would play a role in enhancing all of those positions rather than form its own separate role. But I'd be interested to read this project when it comes out.
Yes, I encourage you. The paper is available currently, and the group will have a webinar on it in early June.
Good, thank you. I'll be sure to tune in. On the point of institutional change a little bit, we were discussing about fraud earlier. How can banks better protect against fraud beyond just trying to develop technology at a rate which keeps pace to it? How can their staff be empowered to handle what looks like a riskier transaction?
We also just published a white paper on mitigating fraud. Then that was published about a month ago, and it's available. What we looked at in that paper were evolving fraud typologies, and we're seeing, human scams continue to be one of the biggest threats to the financial system. So while, yes, there are these AI-generated frauds, the continued weakness in the system are people and human behaviors, and how people can how people are susceptible to scams and can be manipulated in fraud schemes. So that continues to be one of the things that I'm not sure the banks or governments or anyone have fully figured out how to get in front of human behavior to get people to unlearn some of those vulnerabilities. There's an emphasis on, and particularly in trade, moving everything from paper to digital that you can. And because it just gives you a different ability to control it and to have preventative frameworks and detection put into place. There has been a theme, particularly as it relates to payments, where there are combating incentives. One is you've had this theme from the G20 of faster, 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 as well as cheaper and more transparent, while there is a recognition that there is potentially such a thing as too fast. For the purposes of fraud, the faster you transact and the more touchless you transact, the faster fraud happens. So there are instances where we maybe need to slow things down specifically to prevent fraud. Now, where that balance is, I'm not sure if we know, but that certainly is the topic. We've also seen the banks, again, trying to get the balance right between how they deploy technology to identify aberrant behaviors and patterns to then using human judgment to be able to better manage their fraud models. And the one thing from a policy point of view that stays out there is the notion of information sharing. Because there are still so many restrictions within various geographies on institutions being able to share information, not just about financial crime, but fraud as well, we have to find a better way to share information around fraud.
Thanks a lot, Tod. Yeah, just to close off this interview, we weren't able to attend the annual meeting in person, but I was sent recordings of all the sessions. And in preparation for this interview, I transcribed those recordings and made a word bubble out of them. So that's basically which words were most commonly said throughout the annual meeting, excluding like and, but, if, etc. I was wondering, do you want to guess what the most commonly said word was across all the sessions at the BAFT annual meeting?
Oh, wow. This is going to be fascinating, I'm sure, when I hear the answer. I mean, I'm thinking possibly innovation, possibly disruption, possibly AI. I think the one, and this is probably not the right answer, but the one that resonated the most with me listening to the sessions was partnership.
That's the answer.
Wow.
After that, it was interoperability, followed by governance, and then followed by technology, which I guess ties together everything that you said.
Interesting.
I can't believe you got partnership. I didn't expect you to.
You know, I guess what that says is maybe I was actually paying attention.
That's always a relief to know. Tod, thanks a lot for joining me today. It's been a really interesting discussion.
Excellent. Thank you.